Hey everyone, welcome back to NIM's Adventures to Financial Freedom. If you're new here, thanks for stopping by. I'm excited to have you join the journey. In today's update, I'll be sharing the latest milestones, portfolio updates, and the strategies that brought me closer to financial freedom this October. So let's dive in. October 2025 saw global markets continue their positive run, underpinned by robust U.S. earnings, ongoing enthusiasm for artificial intelligence, a Fed rate cut, and easing U.S.-China trade tensions. As of the end of the month, the total value of my portfolio stands at $287,597, representing a total gain of $41,248, or 13.3% overall. My annual passive income now covers 36.32% of the portfolio, generating $104,453 annually after tax. Now, let's move into the portfolio changes I made this month. I continued adding to ULTY, with multiple buys throughout the month as part of my ongoing Retire on Ulti series. I also added to EGGS, which aims to capture the growth potential of U.S. large-cap equities, provide consistent income, and hedge against market downturns, a strong addition to balance out volatility in my overall net worth. I increased my position in FIAX, which provides fixed income diversification and consistent monthly yield. A new addition this month was TDAC. It runs the same strategy as T-SPY, which has already proved itself, but applied to the NASDAQ, offering a fresh way to capture both income and tech-driven upside. I also expanded my crypto exposure by adding MSTW, YBTC, and YETH. In addition, I bought more GPTY for AI-specific exposure and some KGLD to build a small allocation to gold as a defensive hedge. No sales were made in October. My focus was purely on building and compounding. Now, let's dive into the portfolio breakdowns. We'll start with the Ultras, the engine of my strategy. This portfolio was originally funded by a personal loan and is made up of high-conviction, single-stock ETFs that generate aggressive weekly income through option overlays. I've also expanded it by adding a single stocks ETFs that I believe have stronger upside potential, balancing income with long-term growth exposure. Let's break down why I hold each position. For TSLW, Tesla still has plenty of room to grow in my view. The robotaxi is only in its very early stages, and the humanoid robot project is still under development. Both could completely reshape Tesla's business model in the future. Moving on to NVDW, NVIDIA remains the powerhouse of the AI revolution. It dominates GPU technology for data centers, training, and inference, powering nearly everything happening in artificial intelligence today. Then there's PLTW, which represents Palantir, a company sitting right at the intersection of AI, defense, and big data. With its deep government relationships and growing commercial adoption, I see it as a long-term compounder. Meanwhile, HOOW gives me exposure to Robinhood, a platform quietly transforming from a simple brokerage into a complete financial ecosystem with crypto, credit, and retirement products. MSTW adds exposure to MicroStrategy, one of the strongest Bitcoin proxies in the market. It's volatile, but I view it as a tactical way to participate in the digital asset cycle. And finally, COIW focuses on Coinbase, the largest, most regulated crypto exchange in the U.S. With growing institutional adoption and global expansion, it's well-positioned to benefit from the next phase of crypto growth. All these round-hill weekly pay ETFs combine exposure to innovative, high-potential companies with high weekly income, exactly what this portfolio is built for. When it comes to the yieldmax ETFs, NVDY, TSLY, CONY, and MSTY, I usually don't like to cap the upside in this portfolio, since I'm bullish on the underlying stocks I pick. However, I've decided to keep these yieldmax positions purely for the sake of the leverage experiment, to test whether my loans can be fully covered by dividends alone. If you'd like to see my latest loan status and how this strategy is tracking, there's a detailed update video linked in the description below. By the end of October, the Ultras closed at $98,698, up 12.6%, and generated $6,730 in dividends. Next up, the Dividend Boosters. This portfolio is designed to supercharge income, holding ETFs that yield 20% or more while maintaining diversification across multiple themes. Here's the breakdown. Starting with ULTY, yieldmax's Ultra Option Income Strategy ETF acts almost like a mini hedge fund, applying option overlays across multiple assets to maximize income potential. Next is Blocks, which captures exposure to the entire crypto ecosystem, not just Bitcoin and Ethereum, but also miners, chip makers, and blockchain-linked companies like MicroStrategy, Coinbase, and Robinhood. It's a creative way to combine yield with innovation. Then comes WPay, holding all of Roundhill's weekly pay, single-stock ETFs with slight leverage to enhance both yield and growth potential. It delivers steady weekly cash flow from some of the biggest names in the U.S. market. GIAX follows, adding broad equity income diversification and even a touch of international exposure. Its options overlay helps generate income while keeping upside potential intact. FIVY is one I'm still testing. It follows the Dorsey-Wright Hybrid Option Income Index, blending momentum with income from select yieldmax ETFs and their underlying stocks. It's an interesting concept, but I'm still evaluating whether it truly fits my long-term strategy. Rounding out the crypto side, I hold YBTC and YETH, which generate income from Bitcoin and Ethereum through option overlays. Smaller allocations since my main crypto play remains in blocks. And finally, GPTY, a yieldmax ETF targeting AI-related companies, giving me focused exposure to one of the fastest-growing sectors in the world, while maintaining a high income stream. Together, these funds create a powerful combination of high yield, diversification, and exposure to several of today's strongest long-term growth themes, from AI to crypto to global equities. By the end of October, the Dividend Boosters delivered $4,297 in dividends and closed at $104,050, up 6.3% overall. Now onto the core portfolio. This portfolio that brings balance and long-term reliability. It's built around major U.S. indexes and asset classes, using income-focused ETFs with option overlays or yield-enhancing strategies to generate consistent monthly cash flow. Here's how it's structured. For S&P 500 exposure, I hold SPY-I and T-SPY. For NASDAQ exposure, QQQI and TDAQ provides income from leading tech names while maintaining exposure to innovation. EGGS is another recent addition, aiming to capture the growth potential of large-cap U.S. equities, provide consistent income, and hedge against market downturns. It adds a defensive layer to this core allocation. For small and mid-cap exposure, IWMI tracks the Russell 2000 through an income-enhancing overlay. DJIA provides access to established blue-chip dividend payers from the Dow Jones Industrial Average. RSPA adds equal weight exposure to the S&P 500, helping reduce concentration risk from mega-cap tech. IDVO enhances global diversification by generating income from international equities. FIAX offers amplified fixed income exposure for yield stability, while SVOL continues to generate volatility-based income. By the end of October, the core portfolio paid $435 in dividends and closed the month at $62,041, up 22.6% overall. And finally, the alternative income portfolio. This portfolio serves as a broader bucket for strategic income assets. Right now, it's primarily made up of REITs and BDCs, but over time, I will expand it into more alternative yield sources as opportunities arise. Main and PFLT are my BDC's holdings, providing exposure to private credit and middle market lending. Both deliver consistent monthly distributions backed by diversified loan portfolios. On the real estate side, I hold O, ADC, STAG, and IYRI, giving me exposure across industrial, retail, and global property markets. These REITs provide stable, asset-backed income that complements the more market-sensitive ETFs in the rest of my portfolio. By the end of October, the alternative income portfolio paid $90 in dividends and closed at $22,807, up 18% overall. So, how does the overall portfolio look right now? My largest positions are ULTY at 11.1%, blocks at 7.0%, TSLY at 6.5%, WPay at 6.4%, and GIAX at 5.8%. Other meaningful positions include HOOW, TSLW, PLTW, NVDY, NVDW, COIW, and MAIN, each between 3% and 4%. From there, most of my remaining holdings fall between 1% and 3%, giving me a balanced mix across high-yield ETFs, core funds, and alternative income plays. Now, let's talk performance. For October, my top performers were STAG, up 8.7%, PLTW, up 7.7%, and NVDW, up 7.7%. Other strong names included Blocks and GPTY, both up around 6%. On the flip side, my biggest laggards were MSTW, down 20%, Maine, down 10%, and YETH, down 9.5%. Overall, October brought mixed results. While income remained strong, the portfolio experienced a slight dip in market value. Across all portfolios combined, I received $11,553 in dividends, the highest amount since I started this journey. From October 1st to October 31st, my portfolio finished slightly down 0.11%. For comparison, the S&P 500 gained 2.54%, the Nasdaq 100 gained 4.78%, and SCHD fell 1.97%. Markets don't rise in a straight line, and short-term fluctuations are part of the journey. What matters is the long-term trend and the consistent cash flow that keeps compounding month after month. The goal here isn't just to grow, it's to grow with cash flow. And that's exactly what keeps this journey moving forward, month after month. To stay on top of my portfolio performance, I rely on Snowball Analytics to seamlessly track all my portfolios in one place. It highlights my passive income alongside my net worth, keeps me updated on top gainers and losers, and even shows when my next payment will land. The holdings page offers a breakdown of total profit for each asset and in-depth performance analytics. With these tools, plus a vibrant community of investors, Snowball makes my investing journey smooth and efficient. You can register for free using the link below. And if you're already using Snowball Analytics and want a discount on premium features, use the promo code for a 10% discount. As always, this video is for entertainment purposes only, and not financial advice. Please do your own research and consult with a financial advisor before making any investment decisions. So, what do you think of my strategy so far? I'd love to hear your thoughts, suggestions, or even your own dividend goals in the comments below. If you found this video helpful, don't forget to give it a thumbs up, subscribe, and ring the bell to stay updated. Also, feel free to share this video with others who might benefit from these insights. It helps us grow and continue this journey to financial freedom together. Thanks for watching, and I'll see you in the next episode of Nim's Adventures to Financial Freedom.